Hello, Jerry Walker CPA here, founding partner of Coburn, Cheshire and Walker CPAs, to discuss how you can save federal income tax via the new no tax on tips provision included in the One Big Beautiful Bill Act that President Trump signed in July of 2025. Now, this new provision allows you to exclude up to $25,000 of qualified tip income from your taxable income, which could result in considerable tax savings. Now, the first qualification is that the tips must have been received in an occupation where tipping was customary on or before 12/31/24. So, lest you think you could redesign your business model so that all of your employees are now paid by tips, that's not going to work. It has to be an occupation where tipping was customary before 2025. In fact, the IRS has published a hard list of qualifying occupations. And of course, all of the usual and expected occupations are on there, like restaurant server, cab driver, hairdresser, bellhop. But there are some occupations that I thought would be on the list, which are not there. And then there's some that are on the list that surprised me just a little bit. So you'll want to check that list if there's any question about your qualifying occupation. Additional qualifications for this exemption is that the tips must have been received under a voluntary arrangement, not subject to negotiation, and the amount of the tip must be determined by the payer. So let's give an example. Let's say you go to the restaurant with a large party, and they tell you that because your party is so large, they're going to automatically add a 20% tip to your bill. Now, that's kind of customary, and you see that in restaurants frequently, and so you're probably not opposed to it, but it does make that a non-qualifying tip because it was automatically added to the bill. Number one, it was not voluntary. Okay, you had no choice in the matter. And number two, the amount of the tip was not determined by you, the payer, it was determined by the restaurant. So in that scenario, restaurants are going to have to keep track of the non-qualifying versus qualifying tips that their servers have received. In the middle here, we've got the not subject to negotiation. So for example, if you want me to do some work for you and you offer me, say, I will pay you X to do the job, and then I'm going to tip you Y, and I say, well, I will do the job for X, but the tip of Y was not satisfactory. I want a tip of Z. Well, now they're in this process of negotiating over the amount of the tip, which makes it a completely non-qualifying tip. A few more additional qualifications. Number one, if you're married, you must file a joint return with your spouse to claim this exemption. Now, if you're single or head of household, that's not a problem to claim the exemption if you meet all the other qualifications. But if you're married, you can't file separately from your spouse and still claim the exemption. If you're a W-2 employee, the tips must be reported on your W-2. Now, there's transitional relief for 2025 because the bill was passed in the middle of the year. If you're self-employed, the tips must be reported on Form 1099. So think about an Uber driver or DoorDash delivery person. If you're a self-employed person and you do not receive 1099s in your business, then you must keep detailed records of the tips. And this can be claimed by non-itemizers. So this is not part of itemized deduction. So even if you're claiming the standard deduction, you could still claim the tip exemption. Now there is an income phase out. So for single filers, once your adjusted gross income reaches the 150,000 mark, it's going to start being phased out at 400,000. It will be completely phased out. For joint filers, the phase out begins at 300,000 and finishes at 550,000. Quick example here. If you receive $10,000 worth of tips, you're the 24% tax bracket, that's going to save you $2,400 worth of tax. So as you can see, it's not going to eliminate your tax bill entirely, but I do suspect that you could spend that $2,400 more wisely for you and your family than the federal government can. I hope this information has been helpful. If so, like and share with your family and friends. We always strive to provide practical, legal, and ethical tax advice. We see other tax advice being shared on social media, which is either exaggerated, sensationalized, or sometimes just flat out bogus. Hope you have a great day.